Wealthy people have always focused on increasing their assets and reducing their liabilities. So on today's video, we're gonna be looking at no liability, just two assets, stocks and bonds. Let's go. What's up guys, welcome back to my channel. Thank you for joining me once more. If you're new here, my name is Rozlyn Waridi and you're very much welcome. Make sure to watch until the end of today's video. I'm sure today's topic is going to be interesting. Everyone is seeking to maximize on their income, make some passive income, some other streams of income. If you really want to understand some of the strategies the rich use to continue becoming rich, then this video is for you. I am not rich myself, but I'm hoping to get there someday. So I hope you take this journey with me. I've been reading a lot. And a few weeks ago, I covered 7 books that have changed my life, especially financially. One of the books was Rich Dad, Poor Dad by Robert Kiyosaki. He really brings to light assets and liabilities and fully expounds on that topic, on how liabilities continue to weigh us down and assets continue to bring us money. Assets that the rich use to get rich and become rich and continue to be rich. Stocks. Now, by definition, a stock is a type of investment that represents an ownership share in a company. When you purchase a company stock, you're purchasing a small piece of that company called a share. And investors purchase stocks in companies they think will go up in value. When a person buys stocks from a company, they're entitled to the benefits that come with the growth of that company. For example, when a company issues 1 million worth of shares and you own 50,000 of those shares, then you're entitled to 5% of that company's benefits. And how do rich people continue to get rich? Through stocks. If the value of that company goes up, then that 5% ownership value goes up too. Secondly, we're gonna be looking at dividends. When you own a share of a company, then you're entitled also, dividends are the profits that are shared to stockholders. So if you become a stockholder, the dividends is one of the benefits, and dividends can be given quarterly, biannually, or annually. So not just the price of stocks going up being one of the benefits. I don't know if I put it correctly, but additionally, you get to enjoy dividends too, the company's profits. And dividends are distributed as per your share percentage. I'm new to this, so please forgive me if my terms are not correct. I'm just learning as I go by. And the second part of this video is going to be bonds. We're going to look into bonds and understand them. If you are from Kenya, maybe you may have been familiar with M-Akiba. M-Akiba is an example of bond issued by the government. So it's another form of investments, and you get 10% interest, which is given biannually. So if you have not invested, please go ahead. I don't know if they're going to be opening up in September. I don't know. Yeah, but let's look into the definition of bonds. So what are bonds? A bond is a thing issued to tie something or to fasten. No, this is not the definition that we're looking for. Bonds, business. A bond could be thought of as an IOU. So bonds are used by companies, states, and sovereign governments to finance projects and operations. So M-Akiba is also one of those, like I mentioned before, a bond that you can give to the government, and I think it's really good because the money is being used to grow the country itself, improve infrastructure, and so forth. So now that we have looked into the definition of bonds, let's talk more about them. When the government needs to raise capital for a particular project, they issue bonds to its citizens or, just anyone. But let's differentiate stocks and bonds. Stocks give you practical ownership of a company and you get to enjoy benefits like dividends, or sometimes not enjoy the losses of a company, especially when the value of that company goes down. However, a bond is a debt, an IOU that a company has to its investors. You are basically lending money to a company or the government so that you are able to be paid interest after a specific period of time. We have observed that one of the demerits of having shares is that when the value of a company goes down, you suffer too, right? However, bonds are much safer since ownership of a company puts you to a disadvantage of suffering loss if a company suffers loss as well. If a company loses value, a stockholder loses value too. As for bonds, if they lose market value, they still have to pay their investor their money, inclusive of the interest. And if they go bankrupt, that is if it's a company, legally they are obligated to pay their bond issuers. We have looked into some of the merits of being a stockholder, but I'm gonna just add one more. Stocks have greater return in growing economy. However, for bonds, they are normally issued with lower interest rates. So it is advisable to use bonds to diversify an investment portfolio and limit total risks. And we have come to the end of today's video. I hope it was informative as it was for me when I was studying it and when I was studying them and when I was going through the notes again in my notebook. And I appreciate anyone who stuck around with me through this journey. As I've mentioned before on all my other videos, especially when I talk about money, I'm looking to diversify my streams of income. I'm looking to better myself and become more financially independent. So you are free to take this journey with me. Let's learn together. Let's grow together. If you have any more additional ideas that you may want to mention, the comment section is open for all of you. So keep it open. Any constructive criticism is also welcome. I believe it's going to build me up as much as it will build someone else up too. So I hope to catch you next week on I hope to catch you next week on another video. It can be about mental awareness. It can also be about growth in finance, just like today's video. I think that's it. Thank you very much for watching. If you have not subscribed, please, what are you waiting for? Come on, I'm giving you free information. Support me. I'm still on that journey to reach 1,000 subscribers. If I have not reached 1,000 subscribers by the time I upload this, that's it. By the time I upload this, that's it. But if I do, if by then I would have already reached 1,000 subscribers, oh my gosh, I'll be so happy. Okay, thank you guys. Too much talk. Bye bye. See you.